Hello traders and welcome to the London Forex Broadsheet's daily video wrap of the markets for Tuesday, July 29th. The euro fell against the dollar after oil's dramatic decline, which occurred as equity markets rose. The S&P Case-Shiller HPI came out slightly better than expected and consumer confidence beat the estimates. The euro broke trendline support drawn between July 24th and July 28th and challenged the July 7th low at 1.5611. It's probably still too early to call for a trend of dollar strength here, at least until the non-farm payroll on Friday. The Fibonacci retracement on the daily chart shows the 23.6% level trying to hold up as support for the pair after price moved back to test all-time highs at 1.6040. The last time the pair was rejected at that level, we saw a retracement to the 38.2% level, before price rebounded. The pound fell below well-established trendline support against the dollar to reach its lowest price since July 11th. The pair found support at the resistance established between May 22nd and May 30th. Reports on mortgage approval, net lending to individuals, and the CBI distributive trades continued the trend of declining UK fundamentals. The MPC will announce the official bank rate on August 7th, and while most economists expect the bank to hold, the 7-1-1 vote at the last meeting, along with the NIESR suggestion to raise rates by 25 basis points, may serve to limit the dollar's gains somewhat until then. The 4-hour chart shows a symmetrical triangle. The breakout from a symmetrical triangle could go either way and really illustrates the tug-of-war that has been going on with the cable. Inflation continues to be problematic, but the economy is heading into a recession, handcuffing the BOE. The Aussie fell for the fourth time in 5 days as gold and other commodities declined during the New York trading session. The pair reached levels last seen on July 9th after the extension of the trendline support drawn between March 20th and June 12th was breached. A close below the July 9th lows sets up the Aussie for a test of 93.40, which was support at the last big trend to the upside. The Aussie will be further threatened if gold falls, especially after Australia and New Zealand Bank yesterday joined the National Australia Bank in boosting provisions for delinquent loans. Although the Aussie has been falling for the past week or so, we can see on the daily chart that the pair continues to move in a strong upward trend. The loonie fell, reaching a 6-week low as crude oil lost over $3 a barrel during the New York session. The loonie broke the trendline extension drawn between the highs on June 10th and July 7th and 8th on Friday, tested support near there during overnight trading Monday, and broke resistance today at the highs made on May 2nd and July 1st. A close above this level, coupled with the continued decline in crude, sets up the test of the April 1st and June 9th highs. The sleeping giant awoke and moved higher in a sneaky run that came in under the radar. We now have a pair at a major resistance area that has moved as much in 3 sessions as it has in 3 weeks. Take care here, reversal or breakout, one or the other, and it's coming fast. The Swissy rose as traders sold treasuries as equities caught a bid on better than expected reports on home prices and consumer sentiment, along with a strong profit report from U.S. Steel. The 2-year note rose 7.2 basis points to yield 2.65%, while the benchmark 10-year gained 6.1 basis points to yield 4.06%. The Swissy looks to be closing above trendline resistance drawn between May 8th and June 16th. The 1-hour Swissy chart shows the pair to be moving in a strong upward trend as traders continue to buy the dollar. As the chart clearly indicates, the tendency for this pair is to bounce when it approaches the trendline. The Japanese yen rose as U.S. equity markets gained, surpassing the daily resistance established on July 23rd and July 25th. A close above these levels, coupled with continued gains in equity markets, sets up the pair to test the major resistance at 108.50. A report on industrial production will be released tonight at 19.50. As U.S. equity markets strengthen and the price of oil falls, the dollar strengthens and the Japanese currency weakens. It was a strong day for equities and the dollar today, and that has kept the pair trading above all the daily simple moving averages. On the upcoming economic calendar, we have several top-tier releases scheduled for tomorrow. At 08:15 out of the U.S. we have the ADP non-farm employment change, and at 21:30 we have retail sales and trade balance out of Australia. In Asian equities, stocks traded lower on Tuesday, following the lead set in New York on Monday. The Nikkei tumbled 332 points or 2.49%, while the Australian S&P ASX fell 83 points or 1.69% to 4838. The MSCI's benchmark index for Asia has fallen 24% from the peak reached last summer. European stocks opened lower after New York's losing session on Monday, but gained in the afternoon after the Dow and S&P rallied. On the day, the Dow Jones Stock 600 closed at 279 after gaining 0.33%. The FTSE 100 closed at 5319, up 6 points or 0.12%. The DAX 30 closed at 6398 with a gain of 47 points or 0.75%, while the CAC 40 closed at 4320 with a loss of 3 points or 0.09%. Wall Street closed sharply higher after Merrill Lynch made a deal to sell its portfolios of CDOs. The Dow was at 11,397 after rising 266 points or 2.39%. The S&P closed at 1263, up 28 points or 2.33%, while the Nasdaq finished trading at 2319 with a gain of 55 points or 2.45%. Crude oil for September delivery fell $2.54 or 2% to $122 a barrel. This is the lowest in 12 weeks as the dollar advanced. Gold for December delivery fell $10 or 1.1% to $927 an ounce, leading precious metals to slump across the board. Overall, it was another day of rapid sentiment shifts after U.S. home prices declined slightly less than expected, and consumer sentiment for July showed improvement from last month's reading, which was at 15-year lows. A trend for dollar strength? We hardly think so, because the next potential sentiment change, Friday's non-farm payroll, is just around the corner. One also needs to be concerned about oil. It's fallen about 18% from the July 15th high, which is an enormous fall for such a short amount of time. The buzzword on oil now is demand destruction, but if the non-farm payroll surprises to the upside, or actually shows a gain, does that sentiment still hold? This concludes the London Forex Broadsheet's daily video wrap of the markets. Please check in with our team tomorrow as we help set up your trading day. And remember, if you're into the Forex, you need to be into the LFB.
All contents of the LFB are for informational purposes only and should not be used as a replacement for research by an individual investor, trader, or licensed investment professional. Neither the LFB nor any of its affiliates shall be liable for any errors, omissions, or for any actions taken in response to the information contained herein. We hereby make no representations or warranties regarding the accuracy of any information contained in this broadcast or on our site. Forex market trading involves special risks and may not be suitable for everyone. Each investor or trader should assess their financial situation and risk tolerance before proceeding. Copyright 2007, LFB Services, LLC. All rights reserved.